Chris, can you sort of explain what happened and why it happened, please?
Yeah, I mean, I'm not an expert in oil markets, but what I've read is that basically the US market has a particularly big problem with storage. Well, we have already seen massive collapse in demand globally since the beginning of the year, which probably even started prior to COVID-19 really making an impact, but then obviously being fired up significantly by COVID-19, which had already led to almost 30% collapse in the oil price, right? Now, then we had this negotiation between OPEC and Russia, OPEC Plus, where the discussion was about curbing the oil output to basically provide a little bit of a ceiling below the oil price and push oil prices up a little bit, actually, which generally is in Saudi Arabia's interest, because Saudi Arabia, as far as I know, needs an oil price of up to $80 a barrel in order to be able to deal with its budget pressures. Whereas Russia needs a much lower oil price in terms of meeting its budgetary obligations. So, you know, Russia pulled out of this deal, didn't want anything to do with it. And in response, the Saudis decided that instead of going it alone, they're going to now do the opposite and put massive pressure on the oil price by basically stepping up production. So this already resulted in the stock market crash that we saw earlier. I don't know when it was, in March, I think, in March 2000. Was it in February or in March?
It was already in February.
Okay, so the Saudis then decided to basically do the opposite and pump a lot more oil into the market, which led to a stock market crash in the US and more broadly, and then you know, and caused all sorts of economic problems that we have since seen. Now, only more recently, upon US pressure, the Saudis then agreed to actually, and OPEC agreed to a significant production cut. But apparently this wasn't heeded by the Saudis or anyone else. So as far as I'm aware, the Saudis, in response to their initial agreement to this new deal, went out and made significant concessions, price concessions to the Asian markets, but kept prices for the US markets, you know, as they were before, even a little bit higher. And eventually decided to offer wholesale discounts on their exports, which basically resulted in what we just saw in the beginning of this week, which took the WTI contract in the US to minus, well, it fell by 300% to almost minus $40 a barrel, a completely unprecedented scenario.
And yet the Brent price only fell to $24 a barrel.
That's right.
Shanghai index fell to only 34-ish.
That's right. And that is probably due to what I explained at the beginning, that there are particular storage problems in the US and to do with the WTI contract.
So it's interesting that partly as a result of the collapse in the WTI price, that President Trump has said that one of the solutions would be to basically stop importing crude from Saudi. Yeah. Now that in itself could have significant geopolitical repercussions as well. What are your thoughts on that?
Well, there was a big discussion over the last few days about the US potentially turning back Saudi shipments of oil, which are already on sea, on their way to the US, because, you know, this might be, well, this might collapse the WTI even more, especially, I mean, you know, this sort of 300% crash in the WTI was the March contract, right? Or the May contract, actually. So there's massive concern now about the June and July contracts as well. So, you know, from the US point of view, this makes a lot of sense. For Saudi Arabia, it's a big problem. I mean, there's already a supply glut. They have, you know, prices have collapsed, and Saudi Arabia can't sustain such a low oil price for a very long period of time. It has significant budgetary pressures, which it already had with a significantly higher oil price. So I think we might start seeing the Saudi-US relationship coming undone at the seams, actually. And, you know, this is not I mean, one has to put this question in the context of developments in US-Saudi relationship effectively since 2001, but especially over recent years. While President Trump has actually backed Saudi Arabia and the Saudi Crown Prince, the wider American establishment has been turning against Saudi Arabia well, basically since Trump came into office. And there has been this divergence between the American government still backing Crown Prince Salman despite all the scandals, whereas other elements in the US establishment have been turning strongly against him. And, you know, from the Saudi point of view, of course, most of their oil sales are now to Asia, China in particular. So the importance of Western markets for Saudi Arabia as a producer have declined significantly. And they're basically just asking themselves the question, you know, does it still make sense for us to price our oil in dollars, you know, given how strong the dollar is, and given that the agreement that was struck in 1973 between the Americans and Saudi Arabia entailed not just the Saudis basically doing their bit and selling all their oil in dollars and recycling their dollar earnings in US treasuries and US financial markets, but it also entailed the commitment by Americans to keep Saudi Arabia safe and keep the Saudi royal family in power. And since the attacks have since the attacks on Saudi Arabia by the Houthis, apparently backed by Iran, have stepped up over the last few years, and the Americans have been very ambiguous with regard to whether they're really going to back Saudi Arabia if there should be any regional crisis or any regional war breaking out that entails Saudi Arabia and Iran. So the Saudis are basically getting increasingly uneasy about their partnership with the US and whether it still has the same value to them that it used to.
Right. I mean, what one is seeing, I think, is that the global oil market is segmenting very clearly into a Western and Eastern limb.
Yeah.
With the Western limb served by the Texas index and the Brent index, splitting pretty much between Europe and the United States. And we're now seeing a very clear division along the Suez Canal, really, with this Eastern limb of the oil market, which in the past had the two small centres for trading, Dubai and Singapore, but of course now has the Shanghai centre, which is taking significant amounts of trade from Brent and Texas. It now has got 25%-ish of the total trades. And if this is going to continue, and as you're saying, the Saudis are shipping their oil to China, India, etc., one can actually see the imperative for a center that's not trading in dollars to emerge.
Yes, so we are seeing the emergence of a multi-currency pricing of oil, right?
Well, I think what we're seeing at the moment is pretty much a Chinese pricing. I mean, 30% odd is paid for in renminbi at the moment.
Okay, but not, and that's a big question, but not yet from Saudi Arabia, right?
Not yet from Saudi Arabia. I mean, there's continual rumours that it's going to do so, but it doesn't. I think the very interesting one is Iran, given all the deals that China has signed in relationship to the BRI with Iran, and it does give China really first shout on all the large oil field and gas field developments in Iran. So potentially one could see a great deal of gas and oil coming from Iran into China, and almost certainly paid for in Chinese currency.
And I would add that the same will also happen in a minute with regard to Iraq. There have been stepped up negotiations with the Chinese and the Iraqis since the whole, since the killing of Soleimani by the Americans in Iraq, the head of the Revolutionary Guard Corps, the Iranian Revolutionary Guard Corps, the relationship between the Iraqi government and the Americans have soured even more markedly. and the Iraqis have basically since then stepped up negotiations with Russia, but also with China, and not least with regard to providing oil exports to China directly through bilateral contracts. And I'm sure this will these sort of sales will not be conducted in dollars.
Yeah, I think that's extremely likely. The downside, I think, though, the development of the Shanghai Centre is that at the moment, while there are quite a lot of international dealers operating in the market, they are dealing with internal Chinese demand. There seems to be, so far, very little international trading taking place in the Shanghai Centre. Well, it doesn't mean to say it won't happen, and given the Chinese role in the East Asian regional production system, and now even more in BRI, I think one can look forward to a situation where there will be much more international trading out of Shanghai.
Okay, so, but coming back to the question, which I thought was fascinating, if we see the emergence of a three-block world in oil trading, in a sense, with a WTI contract, a Brent contract for now, there might be a European oil contract at some point, and the Shanghai oil futures contract, right? How does that go together with developments of financial markets, potentially a multi-currency reserve system?
It would be logical to map onto that division of the oil world with the financial sectors, currency, and indeed integrated economic blocks. It would seem a logical progression to me.
But it does raise the question, and I'd like to put this to you then, bilateral relations between governments. Do you think that now, given the market mechanism failures, that direct bilateral mechanism, that direct bilateral relationships with governments now will be key in the oil markets and the energy markets going forward?
Yes, I do. Yeah, I mean, that's very much in line with the overall changes in the global economy and the geopolitical situation. The more the geopolitical tensions are flaring up and are becoming more significant, the more we see trends like this, where market mechanisms become absolutely disabled and absolutely secondary. And it's all about power, bilateral relationships, and about the new alignments that are now forming. Right, and the big question remains, is Saudi Arabia willing to turn against their American overlords at some point in the not so distant future? And I think personally, for this question will also be key to what extent the Saudi-Russian relationship can be mended again after recent troubles. If one has to add, there were actually any disagreements between the two, and the two haven't actually coordinated their response from the beginning.
Well, that's the $64 billion question, isn't it? Have these two actually coordinated all of this to bring about the result that we see? Essentially, the complete collapse of American shale oil. Now, before I ask the question, the Saudis and the Russians have been basically dealing with each other for decades. Not always the best of friends, but they both understand each other. Along comes shale oil just a few years ago, and it essentially interrupts that cozy, or sometimes not so cozy, relationship between these big oil producers. Could it be that these two, notwithstanding the possibility that President Vladimir Putin and Crown Prince Mohammed bin Salman do not necessarily get along particularly well, notwithstanding that, could it be that these two big oil producers that have known each other for a long time essentially looked to undercut and to effectively eradicate the American shale oil from global markets? Because that's exactly what has happened.
Okay, now that's an interesting point, because really it was just the last point of your question that I agree with, from global markets, because really none of what they are doing is undercutting US shale. I mean, ownership of the production sites in the US might change because smaller and more medium-sized shale producers, which have sprung up all over the place with the shale boom, will go out of business. They will be taken over by banks and by the big American energy giants. So it won't take shale off the market. Now, I think the dynamic which will take shale oil, American shale oil, out of international markets is a much more relevant point. Now, there's one aspect to the whole question which one has to also consider, and which also makes me wonder, and this is an unanswered question in my mind, although I do think that Saudi Arabia will eventually tend towards Russia and China with regard to their strategic future. I don't know if we are there yet. And I think also the Saudis' decision to really boycott this recent OPEC deal, which would have seen production cuts and doing the opposite, had also one major effect on the dollar, because we've already had a long-standing global dollar liquidity shortage. There are something between 12 and 13 trillion US externally denominated US dollar debts in the global system, mainly by corporates, not least in Asia, that have accumulated since 2008, in the wake of 2008, in the period of quantitative easing, right? Now, with a rising dollar, that means that the dollar is rising against other countries' currencies, which in return make their currencies weaker and their dollar debts harder to service. Now, that is a problem we have seen specifically spike since early 2018 and throughout 18, 19, and this year. And a collapsing oil price basically withdraws even more US dollars from the global economy and makes this US dollar liquidity crunch even so much worse, and leads to an even more spiking dollar. So, and we can actually see, if I can just show you a graph of how the dollar has fared against emerging market currencies since the beginning of this year. Let me share my screen with you. So I just wanted to show you this graph where we can see that since the beginning of this year, various emerging market currencies, but also more established markets, have absolutely tanked against the dollar, right? We see the Turkish lira, which had already collapsed massively throughout 2018, has lost another 14% in value against the dollar this year alone. The Brazilian real has collapsed by 23%, the Mexican peso by 24%, and the South African rand by 32%. Right? We always forget, we always look at the dollar and the DXY in relationship to the euro and the Japanese yen. But the massive movements that we have seen in the dollar are actually happening against emerging market currencies, and to some extent in the trade weighted dollar index.
Yeah. Let me just present perhaps to you a kind of a counter question to that. I mean, what we've seen with respect to the Federal Reserve's new quantitative easing, is that in March it was 4 times as large as its height in April 2009. In other words, yes, emerging market currencies are collapsing. There is a dollar liquidity shortage, but could that not be easily fixed? If I may ask the question, by the Federal Reserve printing vast sums of dollars and therefore rescuing the situation. So, in other words, alleviating an emerging market currency crisis. Is that perhaps what they seem to understand is all that needs to be done? To simply turn on the taps. Any nascent emerging market crisis is basically simply sort of done away with by lots of dollar printing.
In theory, yes. In practice, I think no. I mean, what we have already seen in the context of the new, money printing in the US, whether it's fiscal policy or monetary policy, is that the US has effectively expanded these central bank swap lines to a whole range of other countries. Of course, not to China, Russia, or Iran. So yes, I mean, the way that the US has provided dollars into the global system to alleviate the pressures on those particularly indebted to US dollars is through foreign reserve swap lines by the Federal Reserve. That's number one. And the latest invention is basically that the Americans have more or less opened or set up an equivalent to the domestic repo market. So they have effectively started an international repo market where central banks can finance themselves short-term, overnight, or in term repos in dollars, because of the breakdown, effectively, the functioning of the euro-dollar markets. So yes, they have put vehicles in place which are meant to alleviate this dollar crisis abroad, but they can also use these vehicles, first of all, very selectively. So I assume that all of this will will be used for political and geopolitical leverage. It depends on how countries then respond to, for example, the US going to them and saying, yes, no problem, we're going to help, we're going to bail you out effectively in dollars, but in return we expect A, B, C, and D, right? Now, if you do that with one country, that's that might very well work, and the US has done this frequently throughout history. But what if half the world is in need of dollar bailouts? How will the world respond? I mean, again, this is, I think, a topic for another discussion that I would like to go into a lot more detail in the future. But I hope that briefly answers your question. I don't think, and also one shouldn't forget, is that any loans that are disseminated through these new vehicles or through other mechanisms remain loans. They are not grants or any sort of handouts. They are loans, which i.e. means that they will increase the debts that already can't be repaid. And the only way that a country or a company or anyone abroad can repay dollar debts is through earning income in dollars, which they can only earn through exports or based on income from international dollar investments. So dividends from their investments in dollars, right? None of that will be enough to repay or potentially even roll over the massive dollar debts that they now have, and which might even increase substantially with a rising dollar, but also with new dollar loans they might obtain through these new vehicles.
So does that not mean that in the end the world is even more indebted to the US and its financial system, that there is in effect no way out, that the US can basically print as much money as it likes, and in the end, even though other countries have vast amounts of US dollar denominated debt, they have no choice but to keep on absorbing more US dollar and US dollar debt, and to generate more US dollar denominated income. It seems almost, does it not seem as if it's an endless circle that results in the US remaining the #1 prime economic engine for the world, irrespective of whatever currency swap arrangements other countries may somehow decide to sort of put together?
Well, that seems to be the consensus within some financial circles in the US. The dollar is a global wrecking ball, and that basically countries can't escape from this dollar dominance. I strongly disagree with that. I mean, what we're seeing now is, and the worse this crisis becomes, right? And the more the dollar debt abroad accrues as a result of rolling these debts over, this puts an out of control spiral, downward spiral on these countries' currencies, which will create extremely high inflationary pressures and eventually lead to massive balance of payments crisis and outright international, financial and economic crises and currency crisis. So at the very latest, at that point, it's decision time, and the decision will involve how do we extricate ourselves entirely from this global dollar financial system, or are we effectively handing over our entire assets and economy to US banks? And I don't think that this is very likely. So I see the dollar strengthening in the short term, acting as a wrecking ball that will create an emerging market, widespread emerging market currency crisis, significant inflation and destruction. And at that point, we will see some sort of global reset, a global currency reset. And at that point, I'm assuming the dollar will fall significantly. But, you know, I mean, that's speculation. We don't know. But I think this is the tendency that we can observe already.
Okay, yeah, no, thank you for that. It is a great topic, and there is a lot to explore, you know, in relation to this dollar dominance, and we can perhaps explore it in more detail in the future if you like. I would certainly like to do that.
No, I think that would be something that we should have a serious discussion over.
Can I just maybe sort of turn to a slightly more simplistic geopolitical question, in fact, Chris, that you had raised, and it is in relation to whether Russia had caused this crisis in itself, and whether we've seen something of a sort of ruble sell-off along with other emerging market currencies, but not a huge sell-off, unlike some years back when the ruble basically halved in value. The question, though, arises that I'd like to put to you: if the Russians had prompted this oil market collapse, did or did not President Vladimir Putin miscalculate in the final repercussions of what has happened recently, or did he get it absolutely right? Come to think of it.
Honestly, I don't have an answer to that. I mean, I thought, from the point of view of crashing US shale, I don't think it makes any sense, right? So the only thing one could see here, I mean, my only view on this is potentially from a strategic point of view, if Russia or Putin were the main cause for what has happened in oil markets, because they refused to accept a production cut agreement with OPEC, is not so much that they wanted to hurt the US shale sector for the reasons that I've already outlined earlier, but I think to drive a wedge between Saudi Arabia and the US, or deepen the wedge between Saudi Arabia and the US. And I think if that really was the strategy, it was a very successful strategy. I mean, we're not yet there to evaluate this finally, but I think the likelihood of the Saudi-US relationship being broken is fairly high.
Well, certainly, US President Donald Trump didn't help matters when he announced that America should really look at generating its own sort of oil needs from within the United States, and basically saying goodbye to Saudi oil. So from that perspective alone, it was essentially a huge geopolitical gift to President Vladimir Putin.
And we should, please go ahead.
No, please, no.
And we shouldn't forget that over the last few weeks there have been renewed speculations about the US stepping up its interventions in Venezuela. And, you know, again, this might be speculative, but if you look at the broader picture of where the world is heading, but also where US foreign policy has tended, not least since Trump, but arguably even earlier, towards more of a reduced international role for the US, an implicit acceptance of the coming multipolar world order, and that the US won't be in a position to retain or even expand its global hegemony, and a focus, not least, on Latin America. Now, Venezuela is the world's biggest oil producer, bigger even than Saudi Arabia in terms of the oil that it still has, right? Whereas Saudi Arabia's sites are said to be depleted quite significantly, probably much more so than is officially acknowledged by Saudi Arabia. Yeah. So I wouldn't be surprised if we see increased efforts by the US to get hold of Venezuelan oil fields improve cooperation with Brazil, another regional oil producer, and focus on its on shale gas and shale oil in the United States. So I don't see how Saudi Arabia is still an important ally from the US point of view, moving into the future. It's actually more of a liability, because it means that the US has to continue to play a role in the Middle East, which is becoming increasingly less relevant to its own strategic posture.
So that there could be a kind of a division of hemispheres here, perhaps emerging, as the US begins to recognize that it has overextended itself, particularly now in the Middle East and other parts of the world, such as in Eurasia and maybe Africa too, and that it needs to now sort of consolidate within its own hemisphere, and that includes Latin America, where clearly the US does not seem to be in a situation where even there it is necessarily dominant. Venezuela being the case in point, but many other countries in Latin America, obviously for quite a period of time now, shifting their allegiances towards China and Russia to some extent. So what are your thoughts on this kind of hemispheric division of the world going forward?
I think it will happen. I think we're already seeing it happen. And I think these sort of questions about Russia's and China's role in Latin America, or the continued US role in East Asia, I think these are just leverage games in the short term, because, once as we retract, right, international power, or the balance of power, shifts. So everyone has to be careful not to give too much too soon. So I think all of these, but I think eventually we will see an end to Russia's and China's influence in Latin America, as we will see an end to America's influence and interventions and meddling in East Asia, and potentially even in other parts of the world. Now the question is, what does all of this mean for Europe?
Oh, that's another question, but I think what we're seeing with the South American development, America resorting to a much earlier phase in its geopolitical activity, because during the Cold War, but even back as far as the mid-19th century, the United States regarded South America as its backyard, has repeatedly intervened. And if you move forward to the establishment of the North American Free Trade Area, it was openly suggested that that would gradually move south. It would go beyond Mexico, it would into Middle America, and it would gradually absorb large parts of South America. And of course, one's seen repeatedly American spoilers to prevent indigenous regionalization in South America.
Yeah, I agree. Yeah.
I'm not so sure about the withdrawal from Asia. I think America's Asia orientation is so very, very, very deep rooted, and it's been there again since well back in the 19th century. It goes right back to the early 19th century, and although in periods the United States has withdrawn, has looked inwards, that looking inwards has never been with respect to Asia. The Asian window of the United States has always been kept open, and if you look at American military deployment, something like 50% of it is deployed in the Western Pacific. I think it would be a very, very substantial change for it to pull that back to any great extent.
So how do you see this playing out then? Because as we know, China is not accepting this situation. So will this lead to an eventual strategic confrontation between China and the US? Or let's call a spade, will it lead to war? Or and also, to begin with, why is East Asia such an important theater for the US, which it has clearly always been, but which in the past, as far as I'm aware, if you look at the planning exercises that went on throughout the final years of the Second World War, in terms of how global the US would like to position itself in the wake of the war, the decision was made that East Asia is absolutely crucial for the US strategic interests, not least because of important raw materials that are only available in East Asia. Is that still something that is guiding US strategic thinking? And is that what explains its focus on East Asia? Or is it purely based on containing China's rise?
I think it's moved very much towards the containment of China. I mean, that was there to a very considerable extent throughout the Cold War, the establishment of a ring of bases around China. I think we might well see a pulling back of the American presence from close to the China border. But I think they will still keep a very large presence in the Western Pacific, if for no other reason that they need to be containing China and its allies.
And will China accept that?
I think China would like the Americans just to get off its doorstep. I think what really annoys the Chinese is that the Americans seem to regard it as their inalienable right to have very large military deployments right on the Chinese border. And as many Chinese politicians have said, suppose we actually establish a base on the Mexican border, what would the Americans say? I think you might see a redeployment. And I think one of the things that we've seen over the last 4 or 5 years is this increasing use of the term Indo-Pacific and increased American deployment into the Indian Ocean and these various triangular treaty arrangements between India, Australia, and the United States, or the United States, Japan, and India, or any other combination of these. And I think you might see a movement into that area and some pulling back from the immediate deployment on the Chinese borders.
I think this is it's East Asia, America, and everything. I mean, it's a huge topic in of itself.
I think we could talk about this very long indeed. And I would come back to the point that it is something that's been there a very long time, and there are all sorts of recriminations, I think, that are deeply embedded. I still think that the Americans live with these things. They always remember the hostage crisis when dealing with Iran. I think that's the first thing that comes up. What was the hostage crisis? I think when it comes to East Asia, it's the guilty men who lost China. Who are the guilty men that lost China? How did they manage this? All those American forces were there in the 30s. How did they manage it?
Well, I have one final question actually on the subject, which would be, what does the oil price collapse, the effects it had on markets, on the dollar, but especially on oil markets, and the potential for future multi-currency pricing of oil, what does all of this mean for China? And has China been the beneficiary of everything that we have seen in oil markets, in the last few months?
I mean, the one point I would make is that as China is such a massive importer of oil, that a dramatic decline in price, particularly at this juncture, where China is very, very, very stretched, I think could be a really important shot in the arm for China.
But its demand has also declined, right, since as a result of COVID. Its demand must have
its demand, but it's still a very, very, very large consumer of oil, even at the present point in time, and that is mostly still paid for in dollars. And I think the low price in the short run could be an enormous benefit to China, because China is going to have an awfully large call on its resources shortly. It's got to get its economy back online. It's got to perform the trick of transforming the economy into one driven by domestic consumption. It's going to have to support a lot of the allies, friends, participants in the BRI and in the regional production system. And it needs to do that just to maintain its credibility, which to some extent it's lost with the virus in the first place. and it is expending a lot of time and effort at the moment in sending resources, medical teams, advisors throughout Asia, throughout the BRI, to actually help deal with the COVID-19. And all of this is going to cost the Chinese a lot of money. So anything they can save on the oil price, I think, would be an enormous bonus for them.
Yeah, from what I understand, the Chinese have been Chinese refiners have been purchasing a lot of crude oil in the last month. This is a huge boon for them, basically, not only in terms of sort of filling up their sort of oil storage reserves, but also in the sense that it leaves a lot of it gives rise to a lot of very cheap assets out there for their big four Chinese state oil companies to purchase, as well as the very large number of private Chinese oil companies as well. And they've been hunting around oil assets now vigorously in the last 10 years. So this presents them with a fantastic opportunity. And I'm looking at assets, for instance, in West Africa, in Southern Africa, particularly Angola, for instance, all these emerging markets and economies which are suffering severely with this oil price collapse, as well as the disease itself. It really puts China and its massive cash reserves from an international resources perspective in a fantastic position, I would say.
I think that's right. I think, however, despite the reserves of China, I think one does have to understand that these things are already under some strain. I mean, it has enormously depleted its dollar reserves, for example, in dealing with the trade war